Hi, everybody. We're back again with Joseph Brancucci with Financial Partners Credit Union. He is the Senior Vice President and Chief Lending Officer for Financial Partners. And the last time we were talking, we had a conversation. He talked to us about, Financial Partners journey and how they became one of the first credit unions to join the Bank on National Initiative. And as you all know, if you're here today viewing this, I'm sure you've seen everything else. You've been engaged with the things that we're doing here at the league to push forward this access to financial systems for the underbanked and for unbanked individuals. But the last time we talked, Joe brought up some really good points around how this, Bank On really is just the start. And it's really a part of a broader strategy for us serving the underserved, for us as credit unions to really, do intentional community development. And what does it look like to start and build that foundation? And, I think he has some really great insights that he can share about, what Financial Partners has done, even at the board level. He talked about the buy-in from the board, talked about buy-in from executive leadership and C-suite as CEO. What does that look like? And I'd love to dive more into that. I'm sure you guys are interested in it as well. So, Joe, if you can reintroduce yourself, let us know who you are again, speak to your passion as well. And then, instead of saying why you're here, why you've been in the industry for so long, tell us more about, what made you start this, what made you be the champion for a broader strategy of community development at Financial Partners.
Thanks again. I'm Joe Brancucci. This is somewhere over 30 years in the credit union industry, over 50 years in financial services. And interesting that my journey started with a savings and loan cooperative, which in New York was kind of a quasi credit union because every member had a share, but it wasn't quite a credit union. And I got my passion for helping people in a unique way from that first job I had. And it was kind of interesting. It's always been there. My passion didn't just begin though in that period of time. I've always thought that there's something lacking in the way people, even my own parents when I was growing up, didn't really know how to manage their money very well. I didn't think they did. I was better at managing my money, and I had my own little businesses, and I saved money, and I actually lent them money, and which is kind of interesting. But the whole point is I noticed it then that they didn't really understand how to really manage budget, how to really stay out of trouble and have something for a rainy day. But I joined credit unions over 30 years ago, and it fell right into my passion about really creating a lifetime relationship with a member. And I thought the concept of membership was really cool because it wasn't like you were just going to the bank and opening an account. You're actually becoming part of a cooperative and part of something bigger than yourself that had a benefit not only to you in the financial realm, but a benefit to the communities that credit union served. And to me, that was a big deal. And I've always had a passion about creating products that are kind of a little outside the box that someone hasn't done before, making the experience better and less risky for the member or less scary. And so for me, all of the things I've done in the last 30-some years have all been around the same thing, about building products and services that attracted the fringe member rather than the center of the line. I mean, anyone can do an automobile loan for an A+ credit. Anyone can do a mortgage. Those are things that everyone can do. But that doesn't differentiate you. You're just competing on price and whatever else, and you're not really relevant. So for me, it's always been building our position in the community by creating products and services that met the needs of those communities and drawing in the broadest segment of those communities. And so the small credit union was less than $75 million. We were actually the largest community credit union in the area for a very long period, for a big geography. And we had major competition in the banks, but we sat down and created ways that we could find those folks. We went out to the various community groups and the not-for-profits in those areas, and we talked about the benefit of a credit union and what we could do for those members. And we lent. I'm a lender at heart, so I know how to manage the risk model. And to me, I'm not scared about a C and D or even E credit as long as I have the mechanism in place not to have them lose their car or go bankrupt or those other things. So to me, it's, that's simple. The risk management part of it, broaden your horizon and just make sure you have the mechanism in place to do it. But what that'll let us do is bring folks in that may have been at the fringe. may not have been able to be comfortable. But, we were also in an area at the time that it was heavily Cuban, and there were a lot of immigrants in that group, and they were very fearful of the credit union and the banks.
Yeah.
And, we brought in students that went out to the schools and talked to their peers. We brought in folks that and made connections with folks that belonged to the Cuban Club and all those other kinds of things. And we didn't go in selling a product. We went in to help them talk about something. And by partnering, we built trust. And so that was a little credit union. And then I went to BECU, where I spent 15 years. And it sounds odd, but we very much did the same thing. BECU is kind of a cult in some respects, because members came into it. And the original Boeing members came in because basically we paid for their machinist tools, and they became loyal to the credit union. But over time, we were broader in the community, and we did things that were positive. We helped build something called Thomas Place, which is a low-income housing authority built project. But we provided the long-term financing so that they could, as the houses moved, there was financing for it, because no one else would finance them. And what we did there is we added educational components and all those other things, and that partnership with the housing authority and the group that actually screened the folks that were qualified for it, we ended up building broad groups of folks that were actually champions of the credit union, because we helped them do things. So again, it's not like one thing, it's a whole bunch of things. It's layering. And I always say that everyone has asked me, every institution I've been at, we've been very successful at lending and not gotten into trouble. How do we do it? It's by layering a lot of things, so that you, first of all, you have a little bit of stability when the market changes, but more importantly, you're not dependent on just one group. And so, that's kind of the structure, but the real passion has to be about, are you really concerned about how people feel and how they, are positioned in the community to be successful? And if you are, then you find ways to get to them. And you can't go traditional ways. Newspaper advertisements, social media works to a point, but what really has to happen is you have to go where they are and where decisions are made for their families. And, in a lot of the cases, it's the churches. There are other places where folks help them get out of trouble, or help them, become citizens, or whatever it may be. And building trust through those organizations helps you then help them be successful. And so that's really where it is. But for me, it's got to be passionate. And I would not have ventured to move into that space here if there wasn't a passion at the board level and the CEO level. It's not going to happen. So to me, we made our first presentation, obviously with the support of the Nader Megadam, the CEO, to go to the board and say, this is what we want to do. And what does our community development strategy look like? Not just about what we do in Orange County and LA County and the neighborhoods where people have, resources. What do we do to expand those resources in places we don't? And the board approved it and totally wholeheartedly supported it. And then we started to develop the things that were necessary, including bringing in folks into our disciplines that had a passion for it. Because the other side of it is, if you just have someone that's not passionate about it, they're not going to think anything past the sale versus the right way of talking to folks. And so, that's really the journey we've been on. And personally, I never talk about success in the number of loans I've made over time, or the number of people I've gotten to houses. It's always about who we've helped on the fringe, even employees who we've made better because we've pushed them to really see their worth. And to me, that's really what it's about. And that's what credit unions do best, when they really focus on who they are rather than on all the pressures of the world around us.
I think you brought me right to, was my next question, really. And I think, one, thank you for doing such a great job of talking about how to translate your passion into a system, right? How do you translate that into the way we do business, right? But, you just brought up a really good piece. How do you guys measure impact? Or what do you think from your perspective, from, your past, from, what's going on at Financial Partners, what you guys have planned for the future? What do you think has been the impact so far, and kind of what impacts do you anticipate having it as doing this community development work, being a CDFI, receiving awards and things like that? What does that impact look like when you guys think of it from a business context, but then also from a human perspective as well?
So success is an interesting thing, because I always in every project I do, whether it's in this particular realm or others, how do I measure success? And this one's a little more difficult, because you can't measure success in the number of loans we do to these folks, or the number of easy cards that we put out there. But I think we're measuring success now in the stories that we can tell, that people have, that they relate to the impact we've had on their lives. Folks don't understand that there are people who are nurses that are underbanked or unbanked or are in trouble because they've been the subject of predatory lending. People think that doctors are all well off. Doctors are terrible with business, and sometimes they get into trouble. And actually, sometimes their background has defined how they actually interact with the banking community. So I think we immediately draw conclusions about, the person who comes in and ratted in ripped jeans and, is some level of minority and, has a lot of problems. And I think it's a lot broader than that. And I think it's more systemic. But I think the reality is we define success by those stories right now, because it's the only thing we really can go on. If I use traditional means, is Easy Card profitable? It's not a loss, but it's not overly profitable. It's not like it's going to make a difference in our financials. At $2 billion, it's hard to make a difference in financials with it. The Easy Cards. As our alternative credit products, the alternative way of qualifying folks for loans, I can measure that. It's profitable. And I said I related in a previous discussion with you, is that we find that those loans don't go bad. They're more likely to pay us than they are to pay their rent payment, because it takes a long time to evict somebody. But the car I can pull back in 30 days. We've changed our collection paradigm, and we don't call it collections anymore. It's called loan resolution, and really membership resolution in the first 60 days. And on the loans that were marginal, we don't want the person to immediately think, I missed a payment, I'm going to get my car taken back. We reach out to them very early on and help them figure out how to make things work. Right now, I've never in my career seen such low delinquency, but that group has embraced the philosophy of really helping the member keep their transportation to go to work, keep their house, don't go bankrupt, don't lose their credit card, whatever it may be. And we're not talking about weird things, we're just talking about listening. First thing, really important in this underbanked, listen, figure out where the person is, respond to that, whatever they have said, and then work with them to make them comfortable. I think too often we like to hear ourselves speak and we don't really listen. And in the communities that we don't understand fully, and I'm going to be the first to admit, even doing this for a long time, I don't understand what's in the mind of somebody in that particular predicament. I can only listen and understand it from their perspective. Right. I think it's a really important part. And I think we talked about culture in a previous interview with you. And I think having the culture that understands that everyone is different and that some folks have a lot more baggage or a lot more behind what they're representing, that you have to help them feel comfortable sharing so you can actually help them in a relevant way. But again, we've had stories where, and I'll give the nurse story as a really good one. You had a nurse who was really in trouble financially, had gotten, into predatory situations. And our folks spent time with that person, helped them start rebuilding their credit. So we had a credit builder thing, got them out of some trouble by doing some restructuring and a few other things, educating them about what was the problem with what they had done so they didn't do it again. Because the thing is, people need to learn, not telling you, you're bad, you're stupid, you did that, but that's not how you do it. But here's what we could have done for you, and this is maybe what you should look out for in the future. And I remember the note they sent back was, you've changed our life. You've changed our life. Well, isn't that really what we're about in the credit union? You've changed our life. You've made, I sleep now at night. I'm able to focus on my job. My kids are happier because I'm not me. So everyone doesn't think, but we can be life-changing. And I think that's the thing that we have to remember as credit unions. We were life-changing when we started. Somewhere along the way, we got mixed up, and now we've got to be relevant again. And that to me is really the story here. It's not about the products. We can talk about those for days. It's really about whether or not we really believe what we say. Someone told me a long time ago, what you think, what you hear, and what you feel, if they're not aligned, you're not trusted. And so for me, we've got to make sure what the person thinks, what they hear, and what they feel are aligned. And that's what really our outreach to the underbanked is. I'm not going to tell you I know all the answers. I can tell you we are a learning institution, so we're always trying to understand, because we make mistakes, but do you learn from those mistakes? Do you recognize them? And then do you change what you've done? Otherwise, then why learn something? So if the credit unions that are listening to this are looking for a quick fix and, a definite profit mark, it isn't going to happen. It's a long-term process, but to me, it's a strategic initiative. We believe over the next 5 or 10 years, we will become a predominant institution because we're relevant in our communities, not because of the prices we give out or what our products look like, but because we will be known for caring and really working the journey with people and then living our byline, which is building long-term financial partnerships. I think that you've got to have, though, a CEO, a board, and an executive team that are all aligned. And in this institution, we are all aligned. You know, I think that's really, I just have got the board to approve a 5-year CDFI initiative plan. And it includes everything, you know, from what we talked about earlier about helping person get dressed to go to work and, you know, how to interview and how to write a resume, you know, all the way through the point of how to start investing when you've passed certain milestones in your career. And I think that since it's memorialized in our strategic, I don't think the right word, but in our strategic framework, that it becomes part of who we are, because it's an iterative process, and everything we do looks out for it. And every mistake we make, again, we make some changes. We're seeing, though, in our lending, you know, we have become a lending machine with a very low delinquency rate, but we're a risk-based lender. And it's just, you know, that's just a matter of that relevancy. You know, you see our increase in both our Easy Card and even our free checking. We have a real free checking because we found that that's the basis of the relationship. Yeah. And I also tell you that the free checking members have an automobile loan with us. They probably have a credit card with us too. They have more relationships than the person who's paying for the checking account, just so you know. So again, everything that I would think that I've learned in my banking career, which has been 50 some odd years, if I applied all those concepts, we would not be successful because the world has evolved and we just need to keep on evolving with it. And to me, the biggest opportunity is reaching out to those that are the least touched. I'll give you a fun example. You know, tier 3 and 4 credits usually don't get pre-approvals, don't have anything like that done. We did a test at the end of last year. Okay, how do we get non-members in our communities who have a lower credit score to actually talk to us? You know, you got to get them to talk to us. And we actually did pre-approvals for those credit tiers. And we have a high level of success converting that particular pre-approval into a membership. And the loans perform just fine. They perform just like any other tier 3 loan would, or you know, probably even a little better than that. But more importantly, we got to start a relationship, and they've expanded the relationships. Well, cool. You're going to help me. You're going to actually reach out to me where no one else does. I'm going to do something for you. And it's kind of it's almost counterintuitive, but it really isn't. If you really think about it, I'm doing something that no one else has done for them. I'm doing it in a non-predatory way. And then I'm working with them and talking about other things that we could help improve the quality of their life. And so it's always, to me, it's always about that one ability to make that one connection and then having a dialogue with the member that they think, hear, and feel in the same way. And that builds trust. And I think that's the biggest challenge with the and underbanked. And if the and underbanked are even minority populations, it's even more difficult because there's other levels of distrust as well. So when you do those things in that manner, I believe you're successful. Do I think we're going to have an enormous balance sheet impact in the next year or two? No. Do I think we'll have an enormous balance sheet impact in the next 5 years? Oh yeah, no question about it.
I think you brought up some really great points. You know, I think especially in this time that we're in right now with so much economic uncertainty, so much social uncertainty, you know, it's really important that when we talk about what's the most near and dear to people's hearts as we've been through these times of uncertainty and coming through COVID and this recession and everything else that's coming, elections and all these things in our country that's just so uncertain. You know, when we talk about the thing that's near and dear to our hearts, which are people's finances, it's important for them to have, you know, that relationship with a financial institution that is going to help them maneuver that and some level of stability in their life being what is most, I'd say, for so many families, especially in the underserved communities, what is of most concern to them, which is their finances. And so you had this consistent theme, right? You talked about how you institutionalized the passion from the top down, really having a CEO that's aligned with your board of directors and your executive team and institutionalizing that culture. And you talked about, you know, the impact of what that institutionalized culture has done, both for internally and how it's changed the way you guys strategic plan, how you guys deliver services, how you relate to your members, right? And then even, you know, the impact that you've had on your members as a whole and, you know, how it's changed their lives. But let's talk of just a little bit more concrete, right? In doing those things, in having a strategic plan, in, you know, being able to offer certain accounts and being able to align products in that way, and having that paradigm shift externally, as well as building the relationships, having the paradigm shifts internally and building those relationships externally. What are some of the I'd say, like, tools or levers that you guys have been able to pull? What other work or initiatives have you guys been tackling in the CDFI world, right? Are you, some of the things like, how have you leveraged the CDFI fund or your low income designation? What are some of the things that other operations folks like you can look to use to be able to make more effectual change or have impact in the way that you guys have?
Great question. So the CDFI, and this is, I'm using an example of what the problem is. And you know, we're one of many CDFIs in the credit union industry now. And many of them have come to us and asked, what are you going to do? You know, we've got this money that we made a really good grant, but what does that really mean? How do we leverage it? And I think that's the problem that most of them have. Is they have a good thought, but how do you really incorporate that thought into what you do? And I think the answer there is, you know, we look at our strengths. You know, we're very strong in consumer lending. Our real estate, we're very creative in the real estate market, and our CRE is very focused on BC multifamilies, places people live, as I call it, not people that, you know, they don't have an apartment that looks showy over the LA County, over LA Bay. You know, they look at what they do and actually people actually live there. You know, we used to say they're not our pretty apartments when we go into for the approvals on them. But all of the things we do kind of leverage our strength because we know we do those things really well. We also know we have a branch system, a retail system that actually members highly respect. You know, they have a high Net Promoter Score. We don't have tellers, we have PTMs, but you know, we have time to spend time with the member coming in. You know, how we actually embrace them when they come in, how we do those things. So for me, it's not, the funds are just an enabler. They're not really the end all. And you know, we have leveraged our CDFI grants many times over. And just, you know, not just doing what we said we want to do with it, but what we could do to leverage them more. You know, the newest grant is very comprehensive, and most of it is not going to be going to our bottom line. It's not going to be, you know, booked as a profit. There are programs that are going to extend into, you know, down payment assistance, you know, last month rent payment.
So crucial.
You know, positive things on loans and whatever else it may be, and so. It's really hard to help others. Somebody had asked me if I could help them work with a broader set of their partners, and I don't have the time to do that. It's a fun thing to think about, but the reality is that is part of the problem. We really don't know how to do this yet. So I applaud the league for starting to try to create a dialogue. There's no great answer here, but the dialogue will start having people think, and the collective think of people who really. Credit unions want to do good. And I think when you get the collective think around doing good and the kinds of things that get rid of their preconceived vision of risk, and this is going to be horrible, and, you know, it's going to change, and understand that it's actually going to elevate who we are. I think that's what's going to be successful. So I don't have a real great answer for it. I just will tell you that you can engage, you know, we're going to bring younger folks in because they want a safe place to start banking, and they you know, especially if they're come from an underbanked household, that they don't have a big bank to go to, you know, which is one of the problems with the youth going to the big bank and not necessarily understanding that's not a good thing. And so, you know, bring them into the fold, help them educate their parents. See, I actually think youth is a really good thing. I was on the board of Junior Achievement for a number of years, both here, but also in Tampa, and then a little bit worked on it in Seattle. And the interesting thing is, what you'd hear from the kids, especially from minority neighborhoods, was that, well, my parents don't know how to budget. They don't understand where money comes from. And they go home and they actually help educate the mother or the father. And then all of a sudden, you know, we have a bank, a credit union spot in Biztown, and, you know, it's the credit unions that they're talking to. So that's what really happens. And so to me, it's really kind of pretty cool. It's, I think it's not instant gratification, but I think the long term, I feel good about what we do. And I think that future generations in credit union will feel good about what we did, and then the basis that we created for them to, you know, run the credit union in the future.
That's awesome. Joe, once again, just another phenomenal conversation with somebody who's extremely passionate about the space, who understands the importance of layering, you know, emphasizing people over profits, and understanding that, you know, community development is really a long-term strategy. It's not a tomorrow, it's not a today, it's not a tomorrow. We're talking change and lasting relationships over the next 5 to 10 years, and really being able to see what I like to say, see the forest for the trees while still understanding the trees individually, catering to it. So Joe, thank you. Once again, you know, are there any last thoughts or any, you know, last words that you want to leave, especially considering, you know, a lot of people watching this are probably practitioners just like you know, they aren't at the C-suite level. They aren't on the board of directors. They're, you know, lending officers, just like chief lending officers, just like you, trying to figure out how to make it work. Any last words you want to leave them with before we close out?
No, my only words would be, don't be afraid of it. Embrace it. You know, things that you don't understand are very you have a fear of. We all do. I mean, you know, yeah. But I think if you just get rid of the fear and understand it's really who we are, and just dig down to who we are. And I think that's what credit unions want to do. And, you know, I also believe that the credit union industry can be a lot stronger if we embrace the outreach to the and underbanked, and to groups of people that are on the extreme, not necessarily that they're underbanked, but, you know, there's an awful lot of folks that are banked that are underbanked.
Right.
Really an interesting thing. And actually, there are more folks that are underbanked than there are that are unbanked, which is interesting. But I just say, if the credit union folks and the incredible mind and the incredible passion within the industry, within this league and within the leagues that it's within as well, I think we could do really great things. And I think that's really what the message is to me. I put a lot of groups together in my time, whether it's, you know, the lending councils or it's Prime Alliance, the mortgage, they were all groups of credit unions that together we were a lot stronger than we were, and a lot more creative when we were together than apart. And so I think this is one that we're just at the beginning of. It's a beginning journey. We finally recognized what we have as an advantage. And I think that, to me, is the beginning of this journey. And we can, you know, create groups that talk this through and really brainstorm around it. I think we could do some really cool things. So my only thing to say.
Thank you, Joe. I really appreciate it, man. Like you said, we're just the people helping people and getting back true to, you know, collaboration amongst our cooperatives to really kind of come and figure out how to solve this problem. Not even solve the problem. Like you said, there's not one answer, but just figuring out how we can better do the work that, you know, we were initially chartered to do. So with that said, you know, we're going to sign off here. I'm Daniel West, our Vice President of Social Impact. This is one of many of the conversations that we have. Feel free, if you'd like to learn any more information around CDFI strategies, community development strategies, or just generally want to learn more about any of the things that we talked about today, feel free to reach out to me at danielw@ccul.org, or to reach out to any of our staff members here at the league, and they can get you in contact with me, and we can continue this conversation and connect you to some of your peers who are doing this work, or I'll connect you to some of those grants and resources to help empower you to do the work that may not have been started at your credit union. So with that said, we'll end it here. Enjoy the rest of your day.